You got Lim in here. What's up, Lim? Um, so again, you've had this consolidation over here. Rate hike comes over here at 8 a.m. at that time, and then we end up consolidating and getting that drop at that time. And then you got that lower high over here that you could have capitalized on. You had another lower high right down here, break and retest that you could have capitalized on with your stop loss above that area. Again, stop loss above this area. That could have, this could have been 3 trades right here. Once after this third rejection, I actually have it in my journal. But once after this third rejection over here, weak bullish candles closing right there, and then you got that strong bearish candle closing. Top wick forms past the low. The safer sell would be after that candle close, but I think, anticipating a rejection off that resistance multiple times, your stop loss right above here, that's where you can maybe capitalize, knowing that GJ should end up selling off at some point during that day. Now, if we go back and take a look at March, no, that was March 13th. If we take a look at February 2nd, Thursday, February 2nd, it came out at what time? February 2nd, that came out at 7 a.m. So here we go. I actually grabbed this on the live stream. When we ended up creating that top wick, we were actually in the downtrend, created that top wick at 7 a.m. As soon as that thing flipped and passed the low of the previous candle over here, that's where we entered, right? And we were able to grab 35 pips for the first TP, and then we ended up holding the runner, continuing down. Let's look at the next one. December 15th. Now, February 2nd was a 50 basis point increase. This is also another 50 basis point increase, bringing the bank up to 3.5%. So that was 7 a.m. December 15th, I said. December 15th. Yep, 7 a.m. I believe we were, where were we? There we go. We were up here. It's the 14th. It's the 14th. Okay, so right over here, December 15th, rate hike ended up happening right over here. So we were in this minor bullish trend over here, broke above that resistance, strong close during pre-New York over here, during London, right? And then pre-New York, created that high, rate hike comes right before 6:30. 7 a.m. the rate hike comes and creates this wick over here, and you get that strong close. Then we end up consolidating, and then look at that. Then we ended up dropping around like 11:30 or 12 o'clock, and you got these lower highs happening. So does that make sense, Serge? That's a big thing that we were just talking about in on Discord together, where it comes to just looking back at previous price action, what happened at this time. And you see pretty much, 7-8 times out of 10, you're going to get that sell-off. So right now, if we look at current price action, yes, we're holding support over here, but most likely we'll either end up consolidating here the rest of the morning and then eventually end up selling off later on throughout the morning, or we're going to end up faking this level out and continuing back down. Or we just, end up rejecting this area right now, maybe even flipping bearish. But I want to see like a nice solid close below this area before I end up taking that sell. All right, so that's GJ right now. I know we didn't do a full breakdown just because we have rate hikes coming out. But if you look at the weekly ended up closing a strong bearish candle last week. Now this weekly already has that top wick and has already flipped bearish. And we have a wick to fill. So there's a great chance that we could come down to 168 within the next day or two to finish off the week. Looking at the daily, you got that strong liquidity grab, flip bearish, strong close bearish with a wick to fill. Now this daily candle is getting a little bit stronger. We've already passed low that previous candle. We did retrace this morning back up to that resistance around, where were we? I think like, I'll take a look on the lower time frame, but we did retrace over here, and now we're even more bearish again. So now can we break our own lows and continue down to 160,500? Looking at the 4 hour, the 4-hour looks like at some point may end up closing below that area, or at least a strong 4-hour candle close. And then we can maybe sell this off the rest of the day and leave a nice runner. Here we go. See how this candle's starting to flip bearish, or at least like retrace quite a bit from that resistance. That means there's a lot of liquidity up there, and now price is going to possibly continue down below that support, and we're going to get a nice sell. I know it's not the nicest price action to the left over here, but if you get any kind of close below this area, you should be able to continue this down. If I pull up my let's see, if I pull up my journal from what date was that? Ended up taking that. We had a couple rate hikes. Let me just show you guys. So we had March 23rd and February 2nd. March 23rd, February 2nd. March 23rd. Here we go. So this is the one I was just talking about. This was a mistrade, but this was that entry you could have taken. Stop loss above there. Grab that move. Resistance formed over here. Lower high. Nice, beautiful break and retest. Low created. That's almost the perfect break and retest right there. All right. Get that strong close below. You end up putting your stop loss above this bullish wick right there. After that close, you can enter after that close and take this thing down. Same thing over here. You get this lower high formed. Lower high formed, bearish candle close, put your stop loss right up here and take this thing down. Now this might, make you a little worry of, bringing price up. You may need to manage risk over here after coming back to break even. But again, you're still respecting this area over here and holding that resistance, right? Like this candle did come back to entry. So, I could see you again closing a percentage, or you've already secured majority of it right here at 1-to-1. So that would have been 3 different entries, and then you could have just held the runner to continue this thing down. And that's all just based on price action, right? But I wanted to show you the other one because this one could be very similar to what we could be getting today. What was it? February 2nd, I believe it was. Here we go. This is the one that we ended up taking here. So 56 pip and 40 pip gain, 2 different trades over here. Look at the screenshots. Now, this was taken literally right after the news, and typically I don't do that, but again, based on previous data and what we've seen in the past, this is how we ended up taking this. I remember taking this. I think Lewis was on the stream, and Lewis took the same trade. That I don't know how I remember that, but I do. But what I want to show you here is more so. Here we go. The higher time frame and this liquidity grab right here. The fact that we were in this bearish trend at the time, right? We ended up breaking below that area pre-stream or pre-bank interest rate. This ended up happening. Interest rate hike came in. Then we ended up passing the low. When you get a liquidity grab like that, and we end up passing low of the previous price action or flipping bearish, price should be continuing down, especially if you have that volume. So right over here, I closed 90% at 35 pips, 1-to-1, stop loss at break even. Looking back at this, I may have secured a little bit less here, right? Anywhere from 50 to 80%, and then let the rest run instead of 90. But this is the first time I was capitalizing on, and it was also during the news, right? It was as soon as the news came out, we got that liquidity grab, and then it passed the low. So it was the reaction to the news. It's not like I was in a trade or traded exactly as it happened, trying to grab this buy. We waited for the liquidity grab, and then it flipped bearish. It just so happened to happen right after that. So this is the 5-minute. Ended up getting the strong bearish candle close here. You could argue maybe you could just enter after that 5-minute close, stop loss above this area, which I believe that's where my stop loss was. But that was the entry. And now if we look at current price action, we could possibly be getting that again right over here. See how the 1-hour candle is already flipping bearish? And what I'm going to do is start to add this to my fellow here, because I already have this pre-journaled. I'm ready to go. And I would say I have about 5 trades or 5 Trello cards of the interest rate hikes for Bank of England. 1 hour, 7:16 a.m. One thing new that I just started doing over here, if I open categorize trades, I used to have a tab. So when I'm doing my later analysis, I used to have a tab for just news, right? And now what I've done is I've actually separated those by each news event coming out. So we have all Fed interest rates over here, and I still have more to go. I still have more trades that I need to review and add them into here. But we have 4 right over here based on the trades that I've taken in the past or missed, and then also 4 Bank of England interest rate hikes over here, right? So I'm going to be able to add another one over here today if we take that trade, or there's actually more. Let's see, this was the last one over here was February 2nd. So I still have to add March and do that later analysis, and then today as well. So I'll have 6 over here for the Bank of England. Then you got NFP, CPI, unemployment, retail sales, GDP, PMI. But you could create a column like this for every single interest rate hike or every single economic data release. Also, where is he? Lenny, what's up, buddy?
Good morning.
Morning, buddy. How are you?
Not bad, just doing my charting right now.
Awesome. You were asking for a economic calendar, in-depth like analysis, right?
Yeah, a long time ago.
Yeah, I'm sorry about that. It's something I've been working on here for you guys so that you guys understand, and also the notes over here. I think the main thing with like economic data releases and what they are over here, I've been logging these in and working on something like this for you. What's up?
Perfect.
You like this?
Yeah.
I've been working on something like this for you guys, but at the same time, the best thing that you could do right now is go back during those economic releases and look at, when it ended up happening. What was the history? How did the data come out? Like the past 2 hikes have been today and yesterday and March have been 25 basis points. Before that has been 50 basis points and also 75 basis points last year, right? So what you could do is go back and do the price action breakdown of what ended up happening at that time, and that's where you start to gain all your confidence. Knowing what the economic data releases are is very important. Like having this is very important. What I could do is share this with you guys, and this is never ending. Like this is something that I'm going to continue to work on, and you're going to see things being added to it as well. But right now, that's what I have for you. All right. So now that's the 1 hour. Look at that liquidity grab. What do we say? All right, candle starting to flip. What do we want to do here?
It's so choppy.
It's choppy, but I just broke down the last couple of times this ended up happening, and we ended up capitalizing on something like this. And now you're getting volume 720. This is the 30-minute. Now, if you're not comfortable taking any kind of trade that I'm about to take here, which I don't think I'm going to take until the 30-minute ends up closing here. So I'll wait for the 30-minute to potentially close below that support. But if that doesn't make sense to you, if you guys don't like that, do not trade it. What you should do is journal it alongside with me, whether it's a win or a loss. And you guys are going to start to develop data on your own to see if this is something that you want to take. Because again, when you guys come in here, I'm not teaching you guys. I am teaching you guys how to trade like me, but at the same time, I understand that as a successful trader, you're going to be pulling from everyone that you guys know as far as what you've seen in the past, what you've studied on YouTube, what you studied from me, and you're going to pull all that data together. And the key is to create your own system that makes sense to you, right? That's why, like Surge, I'm not really changing what you're doing other than some of the decisions that you're making with counter trends and stuff like that. But we're all doing everything based on price action. But you're your mission is to create your own system that makes sense to you. I'm teaching you guys how to read price action, and most importantly, to get your mental right, to get your mindset right, your psychology right in the markets, to make sure that you guys are taking the right trades, thinking the right way in the market, being patient, waiting for your setups, all that stuff. Like that's probably the most valuable knowledge that you could get from anybody. So what you guys should be doing, like I said, is just going back, looking at what you could be doing on each of these trades, journaling the trades. If you missed them, won them, lost them, doesn't matter. But that's what you guys should be doing. And eventually you're going to start to gain a lot of confidence in a lot of these moves, and you're going to be able to add to your arsenal. You're going to be able to add to your setups. Sure, Gio, nice trade this morning, buddy. I was looking at the same exact thing here, mainly on the hourly, and I've seen this before, where you have this resistance, lower high being formed. We got a nice sell-off from that area in the past. Right over here, same exact thing, retested that low. We get this low formed, little fake out of that 250 area. Price comes right back into this area. I know you got that strong bullish candle close there, but once you get that bearish close on the 1 hour, that's your key right there. That price should be continuing down. Again, that's not one of my setups, so that's why I didn't take it. You're sitting right in the range, but I could see how you could end up taking this. Right at the time, before it even happens, I actually had this thing mapped out right here. And this is another great exercise that you guys could start doing. If you guys aren't sure if price is going to continue down, this is what I was seeing. Got that strong 30-minute candle close, top wick form, pass below the previous candle, entry right there, stop loss above the candle, and you're going to get the 1-to-1 continuing down. That's the 15-minute. 30-minute again, I think. No, it's the 1 hour. This is the 30-minute. 6:59 right before the rate hike. This is 30 minutes, 7 a.m. right after the rate hike. Price pushed up 7:01, 7:02, 5-minute, and now 1 hour 7:16. So we've retraced all the way back. 30-minute over here 7:20. Now we're just waiting to see what ends up happening here. Every little detail. Waiting for this 30-minute to close. If this thing closes bearish, see you later. You got a beautiful, I mean, it's not beautiful, but there's a great chance that we end up retesting 168 here. Might be a little choppy, but you got about 100 pips that you could possibly take on the way down here. Again, 4 hour lining up. Looks like it wants to retest that low. You got a clean move on the 4 hour. Daily as well, right? Top wick formed, filling that wick, starting to break its own candle or its own low. All right, gold now. I'm going to keep an eye on this on my other screen here, but gold we're going to take a look at here. Again, gold sitting above 2,000, right? Obviously, right in this rejection range, this supply zone. So at any point, it could be rejecting. That's why it's taking so long to work its way up. Plus, there's not as much fear in the market just yet. Should be, but there's not. Looking at the weekly again, last week ended up giving us a strong close with a wick to fill. We're creating these higher lows here, right? So this candle at some point may end up filling that wick, especially because we have a strong body. It's not like it's a big rejection wick. It could be, but at the same time, the body is fairly strong. So there's a good chance that we could fill that in that bullish trend too. Looking at the daily now, again, we're holding that higher low. Look what we tapped perfectly last week. 2,000, right? So we tap into this area, hold support, and now we're creating these higher lows and higher highs. We created that higher high, but we did reject that area. So it gets a little tricky. We are kind of ranging in this area right here. But again, we're holding that support right there. And now we're starting to break our own highs from that area. So looking at the 4 hour, 4 hour gets a little tricky to break down here, but we're sitting right in this sitting right in this range right here. So automatically what I'm seeing is price creating these higher lows, bouncing off that 50 EMA. Not that that's our strategy, but it helps us understand what the trend is. Getting a strong bounce, right? So if this 4-hour candle ends up closing in the next hour and a half, extremely bullish like that, we could end up continuing up through this area and continuing up to 2056. Don't forget, we have unemployment at 8:30 as well. Actually, yeah, PPI and core PPI, and then unemployment coming out as well. All right. Also, just to go over some of the economics, I know I didn't go through the economic calendar with you guys today, or the fundamentals, but just to do it really quick, just because we had the rate hike at 7 a.m. But rate hikes 7 a.m. barely speaking at 7:30, so that's going to add a lot of volume in the market at 7:30 to see what he's actually saying. We'll see if maybe we could bring that up on live. Maybe that's what GJ right now is waiting for. Oh, did not mean to do that. Don't want Bank of Canada. So GJ right now holding that support over here. Maybe it's just waiting for Bailey's speech. That adds volume into the market, and then we just continue down from there, right? They're either not going to be raising rates in June, or they're going to be raising rates, and that's typically what we need to hear. We got to figure out what they're going to end up doing. Let me open up YouTube here. DOE Bailey live speech. That's 1 year. Let's see if Bloomberg is going to announce anything. We'll see. But again, we're just looking again, the 4-hour candle, we could end up getting that strong bullish candle close, and then I could see price continuing up, maybe filling this range over here. But let's see the 1-hour. This is one of those setups where it's like, okay, the 1-hour just, if it closes below that support right there, next one creates an identical bottom wick to the top wick right there. I could see this being one of those breakouts without the candle closing above. I'd rather see the candle close above, but I could see that if we wait for the bottom wick and it passes the high, you got this range coming up that you could possibly capitalize on. So 87 pips right in that area. That's definitely enough on gold. Starting to see maybe on the 30-minute, you got that resistance right there. We've rejected that area multiple times over here. So again, if you get a candle closed close to that and the next one creates a bottom wick, I'm only looking for the breakout in the 1-to-1 here, right? But again, the main trade for today is going to be these sells. After this liquidity grab on GJ, here we go. 7:30 is the economic calendar sheet that I made for you. Let's see what they're saying over here. So I'm actually going to journal this trade right here. Not the trade, but the setup. $30-minute. Can you guys hear that?
Very, very low.
Very low. What's up, Lewis?
What's going on, bro?
Secretary Yellen tomorrow, James Diamond.
Let's see, sure sound.
Paris here in about 45.
There you go. Now we can hear it.
Conversations with fancy people. Markets move. We got a retreat here off the green on the screen. The SPX now slightly negative, but the yield space is important. The 2-year yield is broken down. 3.88%.
Massive
That's
liquidity grab. If we start to break
really
lows down here and we create a healthy wick right here, I could see maybe putting a stop loss like close enough, like around like 169, 300, and we could take that down.
Continue to watch at the
I don't know if they're going to be covering Bailey's.
excuse me, the 10-year yield 3.40%.
Do this. We go over here. Bank of England. There's releases, speeches. It's the 10th upcoming. Oh. Yeah, they don't have anything. Actually, you know what we could do? We could go to Financial Juice. Serge, I know you got Financial Source going on right now, right?
Yes, but they only give commentaries like.
Yeah, that's what I figured. Speeds live. Here we go.
Over the next 3 years, with
There
calendar
we
year
go.
growth expected to be 0.25% this year and 0.75% in 2024 and 2025. Now, this is not a strong forecast, and we still expect a degree of economic slack to emerge from the end of this year. But the growth outlook is less weak than in the MPC's recent projections. Recent survey evidence supports this upward revision. Consumer confidence, though still weak, is at its highest level for over a year.
100 pips.
In the March edition of the bank's NMG survey, households were more optimistic about the general economic situation than in the previous survey done last September. And the bank's network of agents has reported that activity has been stronger recently than their contacts had previously expected. Now, above all, the improvement in the outlook reflects a further fall in wholesale gas prices, reversing some of the terms of trade shock that has been the primary cause of falling real incomes. But there has also been greater resilience in the economy than we'd expected, as seen, for example, in strong employment numbers. Fiscal policy is also expected to boost GDP over the forecast, building to a peak impact of around 0.5%. Both the temporary 100% capital allowances for qualifying business investment and measures aimed at increasing labour market participation are assumed.
Again, just another reminder
on potential supply.
of the last rate hikes. Remember we just went over?
Inflation. Annual consumer price inflation has come down from a peak of 11.1% in October.
This was your increase.
It remains very
We
high.
ranged
The latest figure
until later in the
10.4% for
morning
March was
when we started to get this
0.8%
around 11 o'clock,
higher than
12
we
o'clock.
expected at
That's
the
what
time
ended
of
up happening. And then we also reviewed another
Higher food
opportunity
and clothing
where I think
prices
in
account for
December
most of
or
that upside
February where
surprise.
the same exact thing happened.
Food
It took a
inflation has
while
been
for price to end
particularly
up
high,
dropping.
reaching 19.9%.
It wasn't February. It was the one before that. So
As you can
December.
see in chart 2, this is not just happening here in the UK. Food inflation rates are similar across Europe. We are acutely aware of how difficult this rise in food prices is for people, and especially for those people on lower incomes. We do see that food price inflation will start to slow. Global prices of wholesale agricultural commodities have come down since the spring of last year, and food producer price indices have eased in recent months. Evidence collected by the bank's agents suggests that food producers expect food production costs to moderate. While this may take longer than we previously thought, we should expect this to feed through to consumer food inflation over the coming year. And I would add that this is what I hear when I visit and meet with both food producers and retailers. And we have good reasons to expect headline inflation to fall sharply from April, as last year's large energy price rises now start to drop out of the annual calculations. In the March release, the prices of electricity, gas and other fuels were more than 85% higher than a year ago, contributing more than 3 percentage points to headline inflation. That contribution is likely to drop significantly to about 1 percentage point in April's data as large increases in energy prices from a year ago drop out of the annual calculations. Looking ahead to the end of the year, the contribution from energy will fall further. This is illustrated in chart 3. Which has the level of the typical household energy bill on the left and the direct contribution of energy to inflation on the right. In the fourth quarter of this year, if energy prices evolve as financial market prices now suggest, we can expect the typical household energy bill to fall to around £2,100. Now, let me be clear, that's still a high number, but it is about 16% lower than the level a year before that, when the government's energy price guarantee was put in place. The year before then. Since energy makes up around 5% of the consumer price index, that fall in the prices of electricity and gas, along with other fuels, translates into a contribution to overall inflation from energy of -1 percentage point towards the end of the year, which is indicated in the right-hand chart. And it's not least for this reason that consumer price inflation is on course to halve by the end of this year. Though, to be very clear, our target is a sustainable return of inflation to 2%. That's what we focus on. So we also have to look carefully at other components of the consumer price index. So-called core inflation, which excludes energy and food prices, is driven by items that can have...
Real quick, guys, you can see the bearish pressure after that liquidity grab. You can see that move coming down over here. We're still holding support, so we're not doing anything just yet, but you're starting to see, you know, price coming back down from that level hard.
As you can see in chart 4, core inflation is also elevated. Some of this strength in core inflation reflects the indirect effects of higher energy prices. But it also reflects second-round effects as the external shocks we have seen interact with the state of the domestic economy. And as headline inflation falls, these second-round effects are unlikely to go away as quickly as they appeared. The MPC judges that there is an important asymmetry in inflationary dynamics in this respect. And this is why, even as headline inflation is coming down, the MPC is paying particular attention to indicators of inflation persistence, including labour market tightness and wage growth and services inflation. Now, since the February report, the news on these indicators has been mixed. There are some signs that the labour market is loosening a little, though at a slower pace than we expected in February, and it nevertheless remains tight. Employment growth has been partially met by an increase in labour market participation, especially amongst younger people. The number of vacancies has come down from the very high levels as well. As chart 5 shows, the ratio of vacancies to unemployment, which is a key measure of labour market tightness, has fallen as a result. Similarly, job-to-job flows have declined a little in the most recent data. In line with the data, businesses across the United Kingdom tell our network of agents that recruitment difficulties have eased in recent months. Employees are moving jobs less frequently, and employers are getting more applications for job vacancies. Nominal pay growth is shown in chart 6, and that has also fallen back slightly, in line with our February projections. Near-term indicators such as HMRC payroll data and the KPMG REC salaries index suggest that pay growth could ease further later this year. And we hear the same thing from our network of agents. Meanwhile, services price inflation, in chart 7, remains elevated, broadly as expected in the February report. This may reflect some rebuilding of margins as well as wage growth and the indirect effects of higher energy and other input costs. The extent to which firms have already passed through higher costs will influence the pace at which services inflation declines. So, while CPI inflation is expected to fall quite sharply as energy costs begin to ease, albeit at a somewhat slower pace than projected in February given the near-term outlook for food prices, the outlook for
basically the economy is not doing too well
and depends on the extent of persistence in wage and price setting. As shown in chart 8, in the MPC's baseline modal projection, which is conditional on a market-implied path for bank rate that peaks at 4.75% in the fourth quarter of the year, an increasing degree of economic slack, combined with declining external pressures, lead inflation to fall materially below the 2% target in the medium term. But the committee continues to judge that the risks to inflation are skewed significantly to the upside.
30-minute ended up closing below resistance, but this candle didn't really give us a bottom wick here, so I'm not confident in taking something like that. Plus, this 1 hour is a little overextended.
It may take longer than it did for them to emerge.
And also, we're getting unemployment and PPI.
Are so unusual, however, that it is hard to be precise about the extent of this asymmetry. So we've not made it part of our baseline modal projection. Nevertheless, the MPC judges that relative to the baseline projection of significant declines in inflation to levels below target, there remains material upside risks over the medium term. Reflecting those risks, conditional on the market implied path for bank rate, the MPC's mean forecast path for inflation is at or just below the 2% target at years 2 and 3. I want to emphasize the point that having this large upside risk on inflation does not call into question meeting the inflation target in our projection using market rates. Now, upside risks may not materialize, and so the MPC's baseline modal forecast remains for inflation to fall below the target in the medium term, conditional on the market path for bank rate. Let me turn to the transmission of monetary policy. Monetary policy is now working to bring inflation down.
All right.
Changes in bank rates seem to have passed through as
Starting
we
to break
expected
below
into
here.
new mortgage and corporate borrowing rates. Overseas bank failures have resulted in asset price volatility since the February.
Okay, I am in.
And spreads on UK banks' wholesale funding rose. But this was short-lived, implying little impact on the interest rates facing households and companies.
I put my stop
While
loss
pass-through into
above
household
the
sight
wick
deposit
right over
rates has
here.
been muted, rates on term deposits and fixed-rate bonds have risen more in line with changes in reference rates. These changes are still working their way through the economy. For example, while we have seen higher rates being quoted on new mortgages, illustrated here, by rates on a new 2-year 75% loan-to-value mortgages, that's the blue line, as well as the effective rates on new mortgages more generally, which is the orange to red line.
Anybody else on this?
The effective rates on the whole existing stock of mortgages.
Yeah, I am. Super small. But yes.
Nice.
Catching up.
Yeah, I took a small position.
Given
Nice,
such
guys.
lags,
I'm on it also.
the rise in
All
bank rates
based
since
on-
December 2021
All right, we're gonna
may
turn
not bring
Bailey
the
down.
economy in the coming quarters, and the MPC factors this into its
This is all accent for so long. Okay. The all based on history. All based on what we've studied in the past, looking at previous trades. If it goes the opposite way, at least we know that we've been sticking to our plan and we've been playing based on back testing. We've been looking at this based on our back testing, but this should drop. We go based on probability. Let's set my stop losses.
The pace at which inflationary pressures ease will depend on the evolution of the economy, including the impact of the significant increases in.
And then again, doing that lets you secure a little bit less as you go. Like you're still securing at 1-to-1, but like instead of 80%, it may be 50%, or gradually work your way down. Instead of 80%, now it's 70%, now it's 60, 50, 40, right? And then you get more and more confident for price to end up tapping into 168 over here. Did I take a picture of this?
The MPC will adjust bank rate as necessary to return inflation to target sustainably in the medium term, in line with its remit. So thank you. And with that, Ben, Dave, and I will be happy to take your questions.
Thanks, Andrew. Usual process for questions, please. Once you get a hold of the microphone, if you could let us know your name and where you're from, and if you could limit it to one question apiece, please, so we can get round to everyone. We'll start with Ed and then Sue.
Thank you. Ed Conway from Sky News. In some senses, some people would say that this is the biggest test of the banks since becoming independent. This rise in inflation, the rise in interest rates. What would you say to those who say that it's effectively failing that test, failing to see the rise in inflation, failing to see how sticky it's become now it's up at the top, failing to understand the nature of food price inflation as well? Do you think that those failures matter in your ability to maintain credibility?
Well, I think you're right, Ed, that
The
the UK economy, and of course the global economy actually as well, we must look at it through that lens as well, have been much larger. So we've set these shocks out, and of course I've referred to a lot of them in my
Beautiful, guys.
The largest one of which is
So I'm taking off
terrible war
50% at 1-to-1.
Question about that. And it's of course it's the test of this regime is how we deal with them and how we return inflation back to target. Now I think you can look at that through two lenses.
And this thing should continue to drop over here.
The second is how are those shocks anticipated, and then
And you might even be able to put your stop loss at break even, but I think I'm gonna leave mine where it is right now. If we pull back to break even, depending on the price action, since I already cut off 50, what I would do here is if we close above
that is what we're doing.
169, 100, somewhere around this area, if we get a close above that area, then I'll be cutting off risk. But if we don't, and we're just coming up and continuing back down this way, then you know, we should be good.
There's a very big underlying shock in food prices, and you know, I showed the chart which showed the same thing is going on in Europe as a whole. Now, I think the news that we've had is not about persistence in the sense of long-run persistence. It's the question of how, over what time, this shock works its way through the system, if you like, and how quickly we expect that to dissipate. Now, what we're hearing, and as I said, I hear it around the country, which I've been doing a lot since we were last here, is an expectation that it will. We will.
Great job, guys. You guys secure yet?
You're already seeing some of that beginning, but it is taking longer. And
Yeah, I secured 25%.
How's that feel, Carlos?
Sometimes to do with hedging.
Oh yeah, it feels great, man, for sure.
I've closed 50%. I've closed 50%.
Great job, buddy. Good job.
Thank you, sir.
I'm happy to sort of, in a sense, debate. Well, how much?
So that just shows you how much better. And you know, I don't know if you guys can attest to this. I'm sure you guys can, but when you guys take a win based on reviewing past history, back testing, and then also sticking to your rules, sticking to your system, when you guys take trades based on that, it feels 10 times better than when you guys break your rules and you end up winning that trade anyway. Because when you reward that behavior, it's typically not where you want to be. Like that's not good. You want to treat your brain the way you need to be. And I don't know the best way to say that, but your brain is like its own organism. It's its own entity that you need to be treating the right way every single day, and you got to be feeding it the right things in the morning before you guys, or right after you guys wake up. That's why, you know, I meditate, right? When you meditate, you're setting your brain up for success for the rest of the day, because your brain can take you anywhere. You are what your thoughts are. But when you guys take trades based on you know, not based on your system, and it's just like, oh, I can see this playing out, and you end up winning it, you're rewarding that behavior. I've given you guys this analogy a few times, but it's like when your kid, if you guys have kids, I know Lenny has a kid. Who else has kids here? That's about it. Lenny's the only one with a kid today. If she said a curse word that she heard you and your wife mention, right, in, you know, while you guys were talking or something like that, if she said it, it would be kind of funny. In the back of your mind, it'd be a little funny, and maybe you would naturally laugh at it. But at the end of the day, if you laugh at it, it's creating a bad habit. And she thinks that's funny, and eventually she's going to keep doing it. You get what I'm saying?
Mm-hmm.
So if you guys do this with trading, and you guys take a trade and win a trade that's not, again, you know, not with your rules, you're rewarding a behavior, and your brain naturally thinks, oh, it's okay for me to do this again. Not an area you want to be in.
Can I make the point? I mean, I will slightly to put a downer on it for a moment, if you don't mind. I mean, yes, it's a very big upward revision, but the level of growth is still it's still weak. Let's be honest. I mean, we have to look at both. We have to look at both change and level here, I think. I mean, to get the sort of the proper position. Just on supermarkets. I mean, I don't want to comment on sectors because, frankly, we don't have what I would call sort of consistent data. I would say in the aggregate data, and Ed rather helpfully published this chart this morning, which is one we have as well, which is the aggregate position for the UK as a whole, and it's interesting to look at because it doesn't tell the same story that, for instance, the somewhat similar.
Let's see gold. Yeah, gold's still kind of rejecting that area. Like I said, this candle doesn't have a bottom wick. I could see a lot of people getting trapped right over here. Look, last time we ended up, I mean, we were coming down from this fake out over here and retesting this area, but last time we tapped into that area over here, we ended up rejecting hard and continuing down. I could see this candle either closing a weak bullish candle or a weak bearish candle with a liquidity grab and this thing continues back down for a second. But it, you know, for me, I think it'll only continue down for a little bit until continuing back up. We don't have any girls on the stream, right? Guys, I got to show you guys a funny video that might inspire your entrepreneurship.
What that means is that you look forward, household energy bills are now over 4% of income lower projected than they were in the.
You guys, I saw this last night and I was dying laughing. You guys with me?
Yes, sir.
Yes, yes.
Yeah,
Yep.
you guys are gonna find this. I feel like Lewis, you're gonna find this funny too.
Yes, sir.
Listen to what he says at the end of this. It's like the last like 2 seconds is hilarious.
I was 11 years old in Germany. I'm at this refugee camp, and this one family comes in, a Czechoslovakian family. Last name is Staff. The son's name is Jan. The daughter's name is Katarina. Katarina was dropped dead gorgeous. She was 10, I was 11.
I knew that somehow.
Yes, she's 10, I'm 11.
Right.
And I'm looking at this girl. I'm like, I like this girl. So I find out Jan likes the Super Nintendo, okay? So I said, okay, I'm not a big fan of the Super Nintendo, but I'm a fan of your sister. So we got to figure something out. So that summer, I went to the local swimming pool in Germany, in Erlangen. And, you know, in Germany, they drink a lot of beer. I said, look, you know, there's a lot of beer bottles here. If I collect these beer bottles for you and I bring it to you, what are you going to give me? He says, I'll give you 5 pfennig. So the owner and I brokered the deal at 11 years old. I calculated how many bottles I needed, which was 5,000. I brought the bottles to him. He gave me 250 marks. I went to Kaufhof. I bought the Super Nintendo. I brought it back to the refugee camp. Jan played Super Nintendo. I played with his sister. When I was 11 years old in Germany.
Oh, man. Such a funny way to like say that.
That was a good one.
Right? Jan played with the Super
was funny,
Nintendo.
bro.
I play with his sister. So ridiculous. All right. So I know we're pulling back over here. If you take a look at the 15-minute, this is something to keep an eye on, where the candle didn't close with a bottom wick, and now this candle pushed down and is now flipping bullish. Now, I personally think that price is going to now just pull up into this area, hold a resistance, and then continue right back down, and it created that range for us to continue down into. But that's not what I see. What I'm seeing is no bottom wick and a liquidity grab, this candle flipping bullish. So what we see is what we trade, not what we think, right? So at this point, if we come back to entry here, that's where I do think I'm going to end up cutting 50. I know I said if we close above this area, but based on the way these candles closed over here is something I don't like. And it's also not guaranteed to drop either, right? This could end up being a fake out and continue down. But again, if we end up closing bullish here in the next 6 minutes, then I'll probably end up cutting off, another little percentage. If I closed 80% down here, then I would just leave it. But I only closed 50%. So now I still have 50% of my full risk going. I need to, be more aware of this. Trading is all about knowing what to trade and when, and knowing how to secure it and when. But again, it could just be grabbing liquidity. This thing could very well end up closing bearish and we'll be good. Does that make sense to you guys?
Yep.
Awesome. 15 minutes. You want to
Maybe
be
just pull back.
Yes, sir.
Before NY open.
Yeah, 100%. So liquidity grab. And again, this is also the 15-minute time frame. The 30-minute, most likely we're going to end up getting a strong 30-minute candle close below that support with a strong wick to fill. Right? 15-minute pullback. So process goals, right? And what we focus on every single day is the things that we can control. And that one is journaling and sticking to your rules, but also journaling. So far, I already have 22 screenshots of this trade, and I only just entered. Now, keep in mind, I also was journaling part of this move right over here during pre-New York, right? So some of those screenshots are that. But just keep in mind when it comes to this, always want to get all the detail that you possibly can. I have multiple screenshots of multiple time frames, different times that price was reacting at. Like I took screenshots at 6:59 before the rate hike. I took them at 7 o'clock. I took them at 7:01, 7:02, just so that I could go back into my trades and see like what I ended up doing at these certain times, or what the candles were doing at these certain times. Because when you use the replay tool and you journal your trades, you only really get how the candle closed. You don't get how the candle was at this certain time. Like I wouldn't really be able to understand the fact that this candle, like let's say this 15-minute candle closes the way it does, I wouldn't be able to see the fact that it did pull back and flip bullish for a second before continuing down. That's why you want these screenshots. Also started, I don't, a couple of you guys trade journal almost exactly like me. What I started to do, because I do the bubbles for like certain things happening, or the entries, stuff like that, and then I do these horizontal lines for where I end up closing. I'm now putting the numbers here so that I know where I ended up securing. I put them on the candle, which actually I should move it right there. I usually put it on the candle, and I know like if there's more price action to go, right? I'll know exactly where I ended up securing that first one. But it's also easier to see like, okay, I ended up getting securing right there. Let's say I end up securing again right down here, and then that's 4. But then let's say there's a re-entry, right? There's another entry opportunity. So then that would be 4 or 5 instead of following 3, because I ended up securing before I ended up re-entering that trade. Hope that makes sense. All right, so we're about to get a very, very strong 1-hour candle close with a liquidity grab to open up New York. So 7:59, I'll take the screenshot. Actually, I'll just take it at 8 o'clock. 18 seconds. Sometimes there's no point of taking both of those. All right. Strong close, 1 hour, 8 o'clock close. I'm going to be going through the group Trello today. It's Thursday, so add all your journals in there and then I'll review them. A couple of you guys sent me the links. Or like in Lim's case, we went over a couple of your trades in there, learned a lot from them, right? Went through a couple of those trades in the group Trello already. So I'll probably won't add a comment unless you want me to add a comment. Let me know, Lim, so that you have it for the future.
I think it's fine.
It's fine. Did you add the comments that we went over?
Sorry?
Did you already add the comments that we went over? Like there were a few things for each trade that we could have done a little bit differently. That and then also like the correct trade that you could have taken instead of the trade that you took. Were you able to add those yet?
Yeah, I added into my Notion instead.
Perfect. Perfect. Between you guys and I'm getting more and more tempted to go live on YouTube. I know I said I was doing it, I think at the beginning of April, but one thing that I kind of screwed myself up a little bit was when I first started this group and I first started live trading. It's completely different than it is trading by yourself. When you're trading live in front of other people calling out trades, you know, it's something I embrace, but at the same time, like, you do have to understand it's a lot different psychological wise. Like when you're in front of other people doing all that, and that kind of hurt my trading when I first started the group a little bit, and then I obviously picked right back up. But I just don't want that to happen with YouTube, because I think YouTube is a whole nother animal as well, not just the group, but being on YouTube. So I don't know. I think that's just what's keeping me back, but I'll be doing it. I think the latest I'll start doing it is maybe like mid-June. So mid next month.
Sounds good. Sounds good.
Get you guys some fame. Whole world's gonna know who Carlos is.
Man, looking forward to it for sure.
All right, so that's a strong enough 1 hour candle close below that support that tells me that even if we pull back into this area, price is going to continue back down. So let me see. Let me get a picture of the 30-minute close. Lewis, you start using that app yet? You walked away.
No, not yet, bro. I haven't actually. Thank you for reminding me, though. Completely forgot I had it.
It's I do that all the time where I'll download an app and then I'll forget that I did. But once that becomes like what's it called? Once that becomes a staple in your day and then also in your night, it becomes fun to do. Same thing with like journaling. If you make journaling kind of fun and really detailed and kind of like your main focus instead of like other distractions like Instagram, stuff like that, you replace it with journaling. It's just from Atomic Habits. Just replace your habits, right?
Yeah.
That becomes your dopamine. Like at night, every single night when I go through my day for the next day and I'm able to fill those bubbles in and I know exactly what time I'm doing this and that, that's like it's a dopamine hit. It's awesome.
Yeah, that's true.
So I think you'll enjoy it. I sent it to Sydney. Sydney has an issue with time management, and unfortunately he has a Android, so he's not able to use it. All right, so I'm going to leave this here for now. I'm going to go use the bathroom for a second, then I'll be right back. All right. Wow, look at that. Oh, the candle didn't flip. I thought the candle on the 30-minute over here might flip. Now, this is something that not guaranteed to happen, but what I do think you might be able to take advantage of here, and this is not my setup, I'm not taking this, full disclosure, but you may be able to see a sell once this candle flips bearish and past the low of that candle. If that doesn't happen, I wouldn't be taking it. But if it does, it's something that I will journal because I do think that this is overextended and price may be pulling back. Now, typically, if I'm taking a counter trend trade, I need like a candle to close in my direction. So maybe the best thing to do here is wait for that candle to flip bearish and close bearish. But even better, what to do is waiting for unemployment to come out, PPI to come out. Let's check out the dollar. Where's the dollar at? Dollar's holding support. This is a major support, guys. You guys go all the way to the left over here. This whole area, previous resistance, resistance to the left, these wick rejections, we held support over here, and now we're sitting in that area on the dollar. Right now you're starting to see us kind of holding support, almost like faking this area out right here, right? But you can really draw it like that because it could be bouncing on out of any of those areas right there. And now you're starting to see that support being held. We are on the bearish trend. But you're starting to see the tide turn a little bit over here, at least for now, where you're starting to see these little higher lows being held right over here. Daily starting to push up past the high of the previous candles over here and continue up. Could we tap into that area? And if so, will gold, wow, look at that. Will gold be flipping bearish and continuing back down? See the daily over here. Now the daily is holding, bounced off that support. It was breaking its own highs over here, but yesterday the daily candle did close bearish. So we could be tapping anywhere into this area where the previous bullish daily candle ended up rejecting right over there. And we held a resistance right there because this candle pushed into this area and flipped bearish and closed bearish. So now we're tapping into the same area here. If you look at the 4-hour, that's your resistance right over here. We rejected, faked that area out, right? And now held that resistance in the past. Now we're tapping right into that area. Now, I do think this is a strong 4-hour candle right here, and we may end up getting like a strong 4-hour candle close. But I think gold is interesting because I could see, what was it, Wednesday, right? Wednesday, where were we? Let me just bring up the economic calendar here. Wednesday, CPI 830. Ended up getting this no, that was, I was gonna say this, no way. Okay, so CPI ended up coming out a little better than expected. If we go back to CPI and see what we ended up getting over here, CPI year over year came out much better than, or not much, but better than expected, 0.1% less than what they expected. So they expected 5% year over year in April. They got 4.9. Month over month in April was expected 0.4%. Core CPI month over month in April rose and stayed at, I don't know why I have rose here. Sorry. In April stayed at 0.4%. That's what the previous was, and they were also expecting 0.3, right? So it didn't rise. It stayed at the same exact thing in April as it did in March, but at the same time they were expecting a better number over here and they didn't get it. Now also there was a rise over here year over year for core, right? Excluding food and energy. So those are just the numbers for CPI. And what we ended up getting was a huge rally up and then a big correction coming back down. So I could see maybe price fakes this area out over here based on PPI and then maybe continues back down. But I don't know if gold is something that I'd want to be touching today. You know, I could say that and we get a huge move, but I think GJ is the better setup where something that you could be scaling into for the rest of the day. Even if we pull back, we could very well hold a resistance and continue right back down to 168. But gold over here, you're seeing the bearish pressure. You're also seeing the bullish higher lows and higher highs, which now means we're sitting in a consolidation here, sitting in this like triangle, if you will, where now, you know, price could go anywhere. That's why when it's in areas like this, it's much better to wait for candles to close above areas. I know I was talking about a possible breakout entry without the candle closing above. Now that I'm looking at this, I'd much rather wait for that candle to close above and a strong candle like that before continuing up. Because as you see, we're now rejecting that area. The 1 hour candle closed below that resistance, right? And it may have fooled some people out, thinking, okay, we pretty much closed at that resistance right there. Maybe we could continue up from here. No, you're starting to see a lot of that exhaustion. And that was really your resistance right here as you got that wick resistance. And now we're tapping into that area again. Now, if we didn't have news, even if we didn't have news, I don't think I'd be taking this right now, but I can see 50% of this thing getting retraced. I know fibs only really work in trending markets, but if we take a look at this, 50% is like somewhere down here. So price could pull back into that area. 0.382 is right in this area, previous resistance, and could continue right back up. Again, we don't use indicators, but we know how to use them, and we know price action, and we know that we're rejecting that area right now. So we will see. 15-minute on GJ did end up closing bullish. I'm just gonna take account for that. A weak bullish candle, didn't even engulf the previous, so we're gonna leave it, not micromanage. $15-minute weak bullish close. Now, the only thing here that I don't like is being in this trade not risk-free before unemployment comes out. I do think that the volume is going to continue to push us down. I don't see this thing reversing at all. But, you know, one thing that you could do, right? You got a couple options here. You could take off another little piece over here so you don't have, you know, 50% of your trade running. See, now we're starting to pull back. I could see a resistance being held here. So now that we're pulling back over here, right? Now look at that. Where's that coming from? I do think that we're going to hold this resistance. But again, best thing to do is wait to see if we're going to get that close above that area. But what I also am thinking is like taking another piece off or closing this out and then getting a re-entry to take this back down. But the price action is too nice right now. And we've seen it over and over and over again in history that this thing should hold that resistance and continue right back down. You should have been already fully okay with, you know, entering this trade because of what you've seen in the past and your stop loss just getting hit right away because, well, you're not fully okay, but okay with losing that amount because that's what you put on the line.
Yeah, I was about to ask that because me personally, I secured enough to the point where if price hits my stop loss, I'll be okay with it.
Good shit. There you go. So now you could just let this thing run. Wow, look at that. All right.
Yeah, I'm stopped out.
So I was just stopped out. So that's something to take note of. That hasn't happened yet on Bank of England interest rates. So let's see, 15-minute. How about the rest of you? Who else was in this? Lewis. We got. No, he left. It's 18 a.m. So the volume ended up coming in around like 8:15. So that's another thing to take note of. There's a few things that you want to take note of with this trade. One of them is the fact that this 15-minute closed with no bottom wick. The next one ended up flipping bullish, but then ultimately ended up closing bearish right there. Right? So and then the second thing is 8:15 volume all of a sudden just took us all the way back up over here and stopped us out. So multiple things that you can note in here so you learn for the next time. If you're not doing this, you're not learning, you're not getting better for the next time. You're just going in circles. There's a reason why people trade for 3, 4, 5 years and just don't get anywhere. Or they continue to lose over and over and over again. It's a constant what do you want to call it? A constant self-improvement thing. Just like sports, just like business, just like sales, anything. FDIC make an announcement on, let's see, deposit insurance fund today. Huh? Maybe. Wow, look at this on gold. This was called to the T. Came right down 50%. So that's something to note for next time. I'm actually gonna throw that into my journal here. Because I've seen this happen multiple times over here. I wouldn't be comfortable taking that before unemployment's coming out soon and PPI. But it's something to note for next time so that you could start adding something like that to your arsenal. 30-minute called. Go push at the same time too. Yeah, that could have been it. Was that like let me see. Let's just see. Oh yeah, that could have been it. Yeah, 8:16.
I think it's because US FDIC to make announcement on deposit insurance fund today.
Yeah, that's pretty important when it comes to the banking sector. We've been going over that for a couple
That's what the moves the price quickly, you know, like in 2 minutes, gold drops, everything shoot up. You know, yields jump up, but now it's retracing back.
Okay. Yeah, that was it. Good call, Lim. And Serge. So this is something that, like, you know, for your trade, take a screenshot of this. Let me see if I could actually post this into so you guys could take that screenshot, or you could take your own, doesn't matter. And add that into the journal for why that ended up pulling back. That's just bad luck right there, because everything's, you know, look at GJ now. GJ is going to continue now down, and this may be a good opportunity for a re-entry after that ended up happening, because I do think GJ should continue back down to make an announcement. Deposit insurance fund today. 16. Okay. So I'm gonna put that in my journal for GJ over here. And now a quick reminder, this is another reason why you come onto these live streams, is because, you know, for the psychology factor of what we talk about and what we go through. It's very, very, very easy for you guys to get that victim mentality that you guys just got stopped out because of that, and it's the market's fault and all that stuff. Again, that wasn't really our fault, but at the same time, still take full accountability for what you guys ended up doing here. So like there was still a way for you guys to lose less on this trade. There was still a way for you to lose less on this trade by closing another 50% as it came back to break even. That's the only way you grow. If you know, I could sit here all day long and say, you know, the reason why we got stopped out was because that came out and that screwed us over. Where's that going to get you? Like I could be pissed all I want, but I still have an opportunity to re-enter. You know, we didn't do anything wrong. You guys get that?
Yeah.
Yes.
Always, always, always look in the mirror. Full accountability for your actions and decisions. Because that's the only way you grow. We could have easily cut off 50 over here as it was pulling back. And I know, you know, it could have just been pulling back here to retest, hold that resistance and continue down. Then you wouldn't be making as much. I get that. But again, you know, I could have done that myself. But I'm not pissed about it. You know, can easily make that back with a nice solid resistance formed here over the next, you know, anywhere from 5 to 15 minutes to 30 minutes, and ride this thing down. Good idea to take especially after something like that happening, good idea to take a 5-minute screenshot to see like, okay, we were actually holding support right down here where we actually ended up consolidating. And then once you end up getting, so what was this? This was at 8:17. This is actually the 1 minute. Makes sense. 8:17 ended up giving you that close above over here. After that came out, 8:17 gave you that close above, clear close above this. I was going to say wait for like a close above. Excuse me. Wait for that close above that resistance right here, because now you know market structure is being changed. And there's a higher chance that we could end up getting stopped out than price holding that resistance and continue down and like faking that area out, which we've seen a lot. But again, it's more so the fact that we had this support being held on the 1 minute and price ended up, you know, breaking through that resistance. So those are two hints right there that tells you that we could end up, there's a higher likelihood that we end up getting stopped out than price just dropping from this area. $69, 100. So that 169, 100 level is a key area right there. 5 minutes. Damn. Okay. So let's go to financial. Okay, we got another hawk in Lagarde. I think she was speaking today, right? Let me see. Lagarde.
Yeah, she just speaking right now.
Yeah, that makes sense. And what is she speaking at? Is she taking questions?
She's saying, she said, ECB Lagarde says the fight against inflation is not over.
Yep. And the speech was actually a surprise. Speech announcement comes as a surprise from source. Event added to calendar 24 minutes before the release time. I was gonna say, because that would have been on our fundamental watch over here. I didn't put it on here. I was gonna say we had Bailey over here, but I didn't know she was speaking. So due to speak at ECB's monetary policy and developments in global economy. Okay, so let's get rid of this for a second. Fight against inflation. So she's a hawk. Jamie Dimon, don't expect a U.S. default to occur. I don't expect that either. They're going to come to a deal in Washington. Inflation's been too high. All right, so the euro might see some strength today. I expect blowback from the First Republic deal. As you guys know, JP Morgan Chase ended up buying First Republic 2 weeks ago. Regulation is to drive more banking activities to non-banks. Transmission mechanism of UK monetary policy through the mortgage market has changed so much over time. That's what Bailey was saying. Path of inflation forecast is not reasonable given the scale of shocks. Okay. I like Financial Source. This is like our Twitter.
Is that financial juice, yeah?
Financial juice, yes. You're Financial Source, right?
Yes, I'm in source, yeah.
See, I was actually gonna
Okay, news come out.
Yep. What was it?
Probably bad for dollar because gold jump up, quite significantly.
Okay, I'm re-entering GJ over here. Because we should be breaking through that support. Or not, yeah, we should be breaking through these wicks. So now, again, with the numbers over here, I ended up entering this right here. So this would be 4. Actually, no, 5. 4 would be up there. 5 re-entry after US data release. Similar stop loss up here. Expecting this whole range to get filled. That was 5. 4s up here, stopped out on original. Stopped out on rich. Okay, so now we're recouping some of the loss that we
kind
took.
of mixed data again, some is as expected, some lower, some higher. So
what's PPI at? Let's take a look. Ooh, PPI's down. That's good. That's good for the consumer. Eventually, consumer prices will be going down when producers are paying less to export or import. Yeah, more so import, being that the US is more of an import country now. When they're paying less to import prices or import products, eventually that's going to get turned on to the consumer. But unemployment claims are up, right? But at the end of the day, GJ should be continuing down based on their data and based on this liquidity grab, another liquidity grab, close below that resistance, safe stop loss up there. I could arguably put it right here, but I'm going to keep it right up here for now. That was the 15-minute re-entry, 5-minute.
PPI, like excluding food and energy, is up 0.2 and previous was 0.1. So you see it's a mix.
Good move, good call. Let's see, 1 minute.
There's probably this sharp move gonna be faded a bit.
I love that 1 minute on GJ. Let's see. That's what I was looking at. Economic data. Yeah, you're right. Core PPI is up, but they were expecting that, so that's not going to add too much of a shock to the market. What's gold at? Okay, gold's rising over here. Again, you're gonna need a close above 2038 300 before you could take any kind of buys over here. So let me add that to the thing. 30-minute. E33. And then I want to take a picture of this. This is very important. Get your data going. What you can do here is highlight. Oh. Actually, what I want to do. Yeah, add that to the journal. Again, I keep reinforcing this and telling you guys, but every decision that you make is for your future self. That goes for anything, not like your current self, what you're feeling right now. And the reason I'm saying that is because you're thinking about what you want to be doing or what you want to be seeing a couple of days down the road, a couple of weeks down the road, a couple of months down the road, when you're looking at these trades, looking at these journals and trying to put yourself in the same exact spot that you were back then or you were today. So that you know exactly, like a lot of my trades in my journal, almost all of them, I can put myself right back to where I was when I was taking that, even like 2 or 3 years ago, just because of the detail that I'm putting in. I could just read through it and I could be like, wow, I remember taking that trade. US 30. I actually like the price action here on US 30. I know I didn't break this down for you just because it was a less of an importance for everyone today, being that we have bank rates coming out. You guys don't trade this pair anyway. And the main move of the day, I think, is on GJ. Did anybody else re-enter GJ here? Man,
Yes,
US
I
30.
entered.
No, I didn't.
Okay, that's fine.
I entered.
That's totally fine, guys. It's a mistrade. Good job, Mudia. But if it's against your rules, it's not something that you're used to taking. Don't do it. Just journal it. Now I'm looking at like this possible break and retest over here of US 30. Let's go back. Looking at US 30 over here. Another liquidity grab, bearish close, weaker bearish close with a wick to fill. I can see this daily candle, maybe not filling that wick, but pushing down into this area right over here into 33,300 and then retracing and giving us a strong body candle, stronger than this one, with a wick to fill. And then tomorrow we end up filling that wick and continuing down. Unless Friday, tomorrow, gives us a big rally like we got last week and price pulls back from this area and forms like a higher low. Oh, didn't mean to do that. 4 hour over here. Really coming down from this resistance over here. Right, we've been ranging below that area, but again, that was that hard push from that area. Now we're getting this lower high formed at 600, holding that lower high. The 1 hour candle, grab liquidity, now is rejecting this area over here and looking like there could be a flip bearish. Now, the 30-minute did close a fairly strong bullish candle, even though it closed below this level, closed a fairly strong bullish candle with a wick to fill. So in that case, you need to wait for a 30-minute bearish close to close here before taking this. I wouldn't be taking this on the 15-minute. Even though the 15-minute looks really good, we're already bouncing off that support. So either the 15-minute closes below that area, or you wait for the 30-minute to close bearish, and then you could take this thing down. I hate having all these P&Ls on here. It's kind of annoying. Five minute 8:38 a.m. What I do want to do is, we're waiting for that. I do want to journal US 30 here, just so I have, you know, everything that I ended up doing. Anyone have any questions so far? Anything they want to go over?
What do you think about gold?
Gold. All right, let's take a look. Daily 8:39 and post data. Okay, gold. Again, gold over here still kind of rejecting that area, even though we're creating this higher low. I do like it, but also keep in mind 2040 over here was that previous resistance to the left, right? So now we're tapping in. Yesterday, we ended up rejecting that area as well. Looking at the 4 hour, again, we're just really consolidating in this area. I would probably advise not to trade inside of here. Yeah, I might advise not to trade inside of there. The 4 hour candle has flipped bearish. It is bearish right now. Is it going to close bearish in the next 20 minutes? 30 minute?
Steph, what feed do you use?
What feed?
From which broker?
Oh, like what broker am I on?
No, this trading view is that
Oh,
Oanda?
I'm using Oanda. Why, do you have a different one?
Yeah, I got Oanda, but okay. Because my one is like different. You different. Well, you have different time frames, maybe that's why. Because my 4 hour candles it's a bit different to yours, you know.
Really?
Yeah.
Even with Oanda?
Yeah, with Oanda, yeah.
It's weird.
I can send you like, you know, just screenshot you can
Yes,
compare.
send me a screenshot. Let's take a look.
Because sometimes, you know, I got like two, you know, one Dominion market, one IC market. And when I look, you know, on the candles, they're completely different, two of them.
Isn't
So
that annoying?
it's just confusing, you know.
It's annoying, right?
Yeah, you're just thinking, okay, which I should base my analysis on, you know.
Yeah, I'm a perfectionist in that sense, and it just gets on my nerves when it's like that. But what are you gonna do, right?
Yeah.
I would probably go based on your MetaTrader more importantly. You know what I'm saying?
I more use like trading you, to be honest, you know, because I think trading you
Okay.
maybe broker want to cheat me, you know, so I lose money.
True. That's a good
That's
point.
why they
Too.
show me different feed.
That's a good point too. All right, 4 hour surge. I don't think it's different.
It's a bit different because look on your 4 hour candle. Oh no, it's actually the same.
It's very similar.
Yeah. Because when I watching on mine and on yours, it was kind your 4 hour candle you said is flip bearish. Well, I didn't see my one was still bullish, you know.
Yeah, this looks exactly the same. You see it?
So where does it flip bearish then?
It flipped bearish on the 30 minute. Or it hasn't. If it hasn't flipped yet.
Because you said it's flip bearish on 4 hours, and that's why I was looking. I think, okay, my one is different. That's probably just my mistake, or I misheard you or something.
Yeah, I don't think I said that, but if I did, my bad. But yeah, 4 hour has not flipped bearish yet.
Yeah, okay.
But let
So
me
we don't
see.
need that.
US 30 gold over here, the 15 minute, the 30 minute. Let's see. Yeah, let me concentrate on US 30 here for a second. US 30 still has another hour 20 to hour 18 to close. All right, so it's still got room to move for the clean move to the left. Wow, look at that. Maybe I was talking about US 30 with the 1 hour flipping. You think that was it, Serge?
No, I think it was gold. Maybe I'm not sure because I just look on the candle. I haven't actually watched what was it because you don't have this watermark behind. You know, you need to look in the corner.
True.
Because if you put that big watermark, then we can see exactly what is it.
Yes, sir.
So do you like 830?
What was that?
Do you like US 30?
Do I like it? Yeah, I like it a lot. I mean, I'm still getting used to it, and it catches me every once in a while. But, you know, eventually I'll be able to catch some really nice moves on this, which I already am. But I'll be able to risk more and be more and more comfortable with it, just like I am with GJ and gold. It's a process. It's like it's probably the best example is like if you play professional sports and you go from, or not professional, but if you go from high school to college football or any other sport, it's almost like going from, like, you know, you're the king of the town in high school to now, you know, you got to start that whole thing all over again in college. You got to start your relationships, your reputation as a player, all that stuff. All that starts all over again once you go into college. And then the same exact thing happens when you're a star in college and then go into the NFL or the NBA. You got to start that all over again. So it's the same thing with these pairs.
Because US 30 is like most volatile product you can have. You know?
Oh yeah.
This
Man,
is
I
like Ferrari of trading. You know?
Oh yeah. I like US 30 right now, to be honest with you. I might risk a small amount.
You closed out on GJ? Oh,
No, GJ, I'm very similar setup too. But GJ, I re-entered.
oh, okay.
Yes, sir. So US 30 over here. Stop loss above that 30-minute. And I entered right there. Clean move to the left. Low formed. Low formed this morning. Resistance held and there's volume over. Concentrate. Entry 15-minute. I do think the 15-minute should break through that support. I don't like the price action here, but if we can close below that area, we got a clean enough move to the left, and it's taken based on the 1 hour and 30-minute. I wanted to get a picture of the 1 hour. Yeah, it's a massive liquidity wick. When we see this, when it passes the high of that candle and then ends up flipping bearish and passing the low of the previous candle, a lot of times that should continue down. At least with GJ and gold. Liquidity grab and entry. So that's US 30. Take one more of the 5-minute. How's GJ doing? 5-minute. GJ should be continuing down here. That's the 5-minute. Yeah, sometimes it's kind of annoying going back and forth between all the different cards, especially if you're in two trades at the same time. 848. Now, the only thing I just realized that I'm a little concerned about with US 30 is the 9 o'clock or 9:30 pullback if we end up getting it. But that was a nice strong 15-minute candle close here. What I could do right now is, yeah, I'm going to move my stop loss here on GJ right above that 15-minute time frame, that 15-minute candle. Yeah. Stop loss move down. Now I could actually get rid of this right here. For that previous entry. Record what I just did. That's a very strong 15-minute candle right there. Stop loss move down. And I want to record like a little rejection of that 15-minute here on US 30. I'm not doing anything yet. And I like this too, like you guys being able to watch my trial and error with US 30 as well. You could watch like the progression, because eventually with this pair, you're gonna start to see me really catching nice moves. Support bouncing. And you'll see like where we started. You'll be able to go back into the live streams and watch them again if you want on YouTube. Oh, by the way, can you guys do me a favor? If you guys are on Twitter, I'm just putting this in the announcements. If you guys wouldn't mind sharing that. Wow, look at GJ. Go, baby.
US yields going down, so GJ is usually up because yen is going up and yields tanking.
Oh yeah, exactly. I thought you meant the opposite, but yeah, 100%. 100%. So now 8:54. I'm gonna take a screenshot of that. (15-minute) 8:54 a.m. Yields going up. Man, I would love to see US 30 just drop. We're sitting right around 1-to-1 on that re-entry. But this is again something I would take a little bit less off of. How would I risk? Okay. Right. Just took 50% off. Let me actually get over here. All right, guys, talk to me. Where's everyone at? What are you guys in?
I closed on GJ on the original trade.
Okay.
Like around 30 pips. And I didn't re-enter though, because I was like, I already got the W for the day. So
I love it. I think that's awesome. Would you now, looking back when you're journaling this, would you say you would re-enter?
Yeah, bro, that was a perfect break. Retest. Passing the lows. Strong bearish candle close.
You wouldn't even have to take the entry that I did a little bit earlier. You could have waited for this 15-minute to close. Now with that 15-minute closing, and if you were to take it after that close, the stop loss up there, you wouldn't be at 1-to-1 yet, but you'll be getting close to it pretty soon.
Yeah.
So again, I like the fact that you didn't re-enter that because you weren't comfortable with it, but eventually you will be.
Yeah, exactly.
Again, you guys are playing the long game, baby. Long game. Eventually, you guys are going to start. And think about some of these, like, I hate calling them smart, but like China plays the long game. A lot of the countries in the Middle East play the long game. Russia plays the long game. These countries are thinking about, decades in advance. The Western world right now just thinks like immediately, like right now. What could we be getting now? What could we be doing now? They think like today, this week, this month, this year, and that's it. But if you guys think about the long run, like your wealth building, all that stuff. As an entrepreneur and as a trader, you guys eventually will be far past anybody that you guys know.
Yes, sir.
We'll go right there. Yeah, gold is something I'm not really touching right now. It's just not good setups. It's not giving me a good setup. E59. So hopefully right now, this 15-minute is going to close below that support here. The 1 hour candle will have flipped, and it's the next one will hopefully create a top wick, pass the low of this one, and continue down with a clean move to the left. We're going to take a screenshot after that close. One thing, this is kind of internal for me, but a good buddy of mine, Donvo. You guys know Donvo?
Yeah, I actually watch these streams sometimes.
Oh, nice. Yeah, he was on his not his live stream, but his Instagram story yesterday, talking about how he missed all the moves yesterday, from all the data that came out. And he's just talking about, like, sometimes you miss them, sometimes you lose them, but it's good hearing that from another streamer and another person running a group of how intense he follows his rules and his setups, and that's all he looks for. And he didn't get a setup, and it reaffirms what I talk about. And I know, you guys can listen to me all you want, but at the same time, hearing it from another person too really helps.
Yeah, that's true.
You know what I'm saying?
Was he also in the streams with Raja back in the day? Or?
That's how we know each other.
Yeah.
Let's go US 30. Let's go. 30-minute on gold give us a solid bullish close right there. Again, like I said, I'm not touching gold today. I already took technically 3 trades, but 2 trade ideas. So let's take a screenshot of this. 1 hour. 1 hour. 9:01 a.m. 30-minute.
You trades for a bull short, huh?
Sorry about that, Lewis. What was that?
No, I'm saying that both shorts today are looking good.
The shorts?
Yeah, like both
Yeah.
sells.
Appreciate it, man.
Yeah,
It was 32.
nice trades. Good shit, bro.
So GJ over here, I'm gonna close 80% of this one. Um, nice, Medea. I'll close this a little bit higher. Around 52 pips. Plus break even. I must be up to like 35 screenshots here on GJ.
So you re-enter because you felt comfortable after that liquidity grab
yeah.
and it closed below the support, right?
Yep. Just about seeing it over and over and over and over again, just all the time. Just knowing that, you know, with the bearish pressure, what's happened after interest rates for the Bank of England that we've seen in the past, either missed or taken, all that stuff. Closed 80%, 52 pips, stop loss. Break even. Yeah, gold is a mess. US 30 is whew, looking good. Now US 30, being that I'm still like not as confident in it as of yet, I'm gonna take off 50% here. I know it's not 1-to-1, but I do want to take a piece off just because, especially because this 30-minute candle closed or opened up with no top wick, right? So at some point this thing could pull back at any point, come to break even, and especially on US 30 right now. Wow, look at that. Especially on US 30, with my expertise in it, you know, I'm definitely going to be closing majority of the trade if we come back to break even. Close 50%. And 50 points. So like I said, you know, even though we could have handled GJ a little bit differently that first trade, right? I could have closed 50 up at break even after that news came out. But what I did say was that we can easily make all that back today. Can't believe it's Thursday, guys. Crazy. 50% at 50 points. Storage 30 plus point, and we took this at what time? 8:45. 8:45 a.m. Reminds me, I could take a screenshot of the 5-minute. Screenshot of the 1-minute.
Good afternoon. Hello.
Hey, what's up, buddy?
Please, this US 30, does it move the same way with GJ and gold? Like, does price action work very well for it?
Okay, I just close another percent. Does this move just like GJ and gold?
Yes. Does price action works for it very well?
Oh, price action works the same way with every pair, but the tendencies of the pair is what's different. So like even GJ and gold have much different tendencies, right? but that's what you need to pick up on. 87 closed.
Okay.
Another 80%. No, 87 points. So, US 30 moves much differently, but the price action's the same. The setups are pretty much the same that I look for. Right? It's just like the risk management is a little different.
Okay.
Makes sense?
Yes, sir.
Percent at 15 pips. Okay, now I'll be going, move my stop loss down above that, the 15-minute candle right there. Actually, you know what? No, I'm going break even. This should continue to drop. 2-minute. Break even. Move it down on MetaTrader. GJ as well. I'm gonna move my stops to break even. I don't know, do this. Okay, I didn't even do that yet on MetaTrader. What a day. Nope.
Is that your best so far?
On US 30 or GJ?
No, just in general.
No. No, I wouldn't say so. I've definitely had better trades. But it's it's probably it's up there with the most confident I've been on certain setups. You get what I'm saying? Or during certain events.
Okay.
You get what I'm saying?
Yeah. So you just feel that confidence to go in today, yeah?
100%. Like these are one of those 3% days.
Just know, Fitbo to Kashkari, just making a point that others have as well. It's just knowing inflation has come down, but it's still above target.
They're rare.
No.
And far and few between, but those 3% days are nice. And now if we go over to gold now real quick, look at that rejection of this resistance that we talked about. So right now I'm actually going to take a screenshot of this.
It looks like dollar doesn't want to tank today. Yields tanking, but dollar pushing up. That's why gold doesn't know where to go.
Yeah, it's not always correlated, right? Most of the time it is.
It's always correlated when dollar push and yields push one way, gold push another way. But if it's like one pushing, another one not pushing, is not. And correlation never 100% accurate. So
100%.
There was one time, I think when everything was pushing up.
Yeah, that's again, that's rare, right? But
yeah.
Again, that's where probabilities come into play. I think Lim, we were talking about that yesterday. I was comparing your edge in the market to what a casino has. And you got to think about a casino. A casino is not looking at every individual player through the cameras on the floor and wondering what they're about to do and trying to play what they're about to do based on what each individual is playing and how they're playing at that one given time. They're looking at their overall edge because they have an edge over everybody that's playing in that casino. Yes, there are a few people that beat them, right? There are a few people that make out really well, whether they're playing blackjack, craps, roulette. That's really random, but there could be a point where they end up getting beat. But overall, they know that they're going to beat the market. They're going to beat everyone over the course of the day, and they're going to beat them over the course of the year for sure. That's how they stay in business. So you guys, they have an edge. You guys have an edge in the market, and that's what you need to develop through back testing, through looking through your previous trades and seeing what really works for you and what doesn't, specifically with risk management and setup placements and setups that you guys take. You guys want to be like a casino, have an edge over the market. There's going to be a couple of days that you lose, a couple of trades that you lose here and there, but overall, over the course of the week, you guys are going to be up because you manage your loss on any, or you manage your losses on any kind of losses that you had over the week, and you also chose the right setups because these are the setups in your arsenal. You're not taking random trades. You're not like, damn, I could catch this, I could catch that. No, it's really our setups. The ones that you're not sure about, you're allowed backtest, journal it. Maybe you can add it down the road, but there's a system in place for that you need to have. But with that being said, 9:13. You guys have an awesome rest of your morning. If you guys take anything at all, let me know after this. But what else was I gonna say? Oh, 1 o'clock. I'll see you guys for back testing. Looking forward to that. We had a nice session yesterday, I believe. I don't know why I'm drawing a blank. Oh no, I don't think we caught anything. There was no entry on that. It was really just kind of consolidating. A big move down, big move up, corrected the entire thing. No entries there, so we didn't take anything. But with that being said, guys, do you have any questions before we hop off?
No question,
bro.
no.
Nice trades, bro.
Thank you.
Have a nice day, guys.
Appreciate it, guys. I'll see you guys at 1, all right?
All right.
See you.
See you soon. Bye.